Silver is unique, I think, in ways that your listeners need to understand when they're trying to comprehend silver. First of all, most silver doesn't come out of silver mines. So the supply side is a really interesting conundrum. Of new mine supply, last year, I believe 18% of the new mine supply of silver came from silver mines. The rest came from copper mines, gold mines, and lead and zinc mines. So trying to forecast mine production based on the silver price is a fool's errand, because gold prices and copper prices and lead prices and zinc prices are more important to silver production than silver prices are. And equating mining costs around primary producers is an illusion too, because those costs only pertain to 18% of mined production. Most silver, as a consequence of it being a byproduct or a co-product, requires, from a mining standpoint, only the processing of the silver stream. The costs are paid for by other metals. So the primary cost of production of silver is often less than people think it is. And as the price of silver rises, the supply rises for two reasons that most people don't consider. The first is recycling. At low silver prices, it is less efficient to recycle. At higher silver prices, it's more efficient to recycle. And the easiest silver to grab is the silver that's already been mined, that is recycled as a consequence of industrial utilization. The second is that the above ground stockpiles of silver are large and almost unknowably large. Silver still represents a store of value, if you will, off official balance sheets, particularly in South Asia, in India, Bangladesh, Pakistan, Sri Lanka. And what you'll find is that when the silver price moves up in US dollar terms, particularly when the US dollar moves up relative to South Asian currencies, that South Asian people tend to dishoard their silver, which is to say they tend to be better silver investors than Americans. They tend to buy it low and sell it high, unlike us, who tend to buy it high and, of course, sell it low. So the supply of silver is very difficult to understand. The demand side can be similarly difficult, although it's important to note that right now at these silver prices, there is a supply deficit, which is to say the amount of silver produced in all sectors, primary production, co-production, and recycling, is substantially less than global consumption for fabrication. It's important to know that. What is unknowable, at least by me, is what the above ground inventories are and where they're available for sale. So the fact that there is a primary deficit, while it's relevant, is a very difficult thing to gauge fundamentally, because most of the supply that's ever been mined still constitutes in some way, shape, or form supply. Silver bulls, if there are any left, other perhaps than myself, should get solace from the fact that industrial utilization and application of silver is growing very rapidly. The solar industry, as an example, doesn't exist without the reflective properties of silver. All of the new solar panels that you see in Northern Europe, where the sun doesn't shine, are of course dependent on silver. But importantly, new utilizations of silver are occurring. It is fairly durable, it's fairly malleable, it's fairly conductive, and as a consequence of that, and by the way, it's cheaper than gold, of course, as a consequence of that, the utilization of silver in the fabrication of electronics is growing rapidly. But silver is also a superb germicide, which means that medical applications, water treatment applications, and sewage treatment applications of silver, making use of its germicidal properties, are probably the fastest growing new technological innovations around silver. And I think it's important for people to note that. One of the things that I've always laughed about with regards to the gold market is that with regards to gold, we usually take it out of a hole in the ground called a mine, and then we put it in a hole in the ground called a vault. With regards to silver, an awful lot of it is used. Now, some of it is, of course, as we said before, recycled. It comes back into supply, but a lot of it doesn't. A lot of it is just plain used. And I think that's important. The price of silver, however, does not seem to be set by supply-demand imbalances. Perhaps because the supply is so difficult to understand and forecast, as is the demand. A lot of silver is held off balance sheets, again, particularly in South Asia. And it's difficult to know exactly what demand is there because people are using it precisely because it isn't a government currency. It's used as protection from their government. And those people are wisely unwilling to disclose wealth that they are trying to protect from their own governments. This, I can tell you, when demand for silver, investment demand for silver picks up, the price of the stuff is extraordinarily volatile to the upside. I have watched now, I guess 3 times in my life, the silver price flirt with 50 US dollars. The first time from $1.20 start. The second time, if my memory serves me well, from a $4 start. The third time, if my memory serves me well, from a $15 start. In each case, while the gains that were possible in the metal were lovely, the gains that were possible in the stocks for people who paid attention to the stocks, people who actually did real research, and in particular, people that had the courage to buy them when they were out of favor, were extraordinary. My friend Doug Casey, who, if you haven't interviewed, you should at some point in time, famously said at the New Orleans Investment Conference years ago that the market capitalization of silver equities is insufficient to accommodate the inflows of capital from generalist investors when the precious metals narrative takes hold. His colorful illustration was that when the generalist investors' money began to crowd into the silver equities, the result was like trying to siphon Hoover Dam through a garden hose. And I've witnessed this. The aforementioned Coeur d'Alene was, of course, the most dramatic example, from 10 cents to $65. But in my own experience in the early 90s, when silver was out of favor, I had the good fortune to participate in the construction of two silver companies, Silver Standard Mines, now SSR Resources, and Pan American Silver, now Pan American Silver. The beginning point for both of those occurred with silver below $5 US an ounce. Silver Standard, if my memory serves me correctly, we financed at 72 cents with a full warrant. 6 or so years later, the stock was trading for $45. Pan American, I know this time my memory serves me correct, we financed at 50 cents a share. And in 6 or 7 years, that stock also crested at $45. This gives you some indication why there is a subset of investors, or pardon me, a subset of speculators who are maniacal about silver, simply because of its upside volatility. People tend to view that upside volatility in an almost religious fashion, which is to say that when silver speculators, for whatever reason, believe that silver should move, and it doesn't move, they assume that all is wrong with the world.